topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask Good Questions podcast, broadcasting live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. This week and every week, we will reach for a higher purpose in money and life, as well as a focus on health and wellness. Now, let's join your host, Bonita Bell-Andersen, as together we start with Asking Good Questions.
Hello, this is Bonita Bell-Andersen, and welcome to the Ask Good Questions podcast. Today, we are part 2 of a 3-part series on Social Security. And today, we are dealing with what baby boomers need to know about their retirement income. Those people that they've been retiring, but there's a few more of them to retire, and there's a whole bunch of us out there. So first, I have a little teaser for you before we get started. I'll invite, there we go. Okay, here's my little teaser. In life, would you rather be early or would you rather be delayed? Would you rather pay a penalty or would you rather get a bonus? So I just want you to think about that. And we'll return to those later, all right? So this is what baby boomers need to know. I am going to go through a bunch of things that have to do with this. This is such a huge, important question. And let me just also tell you, I have been teaching in-person classes for many, many years, community colleges, libraries, things like that. Now I'm doing it online with a podcast. Who would have known? But anyway, here we are. I want you to know what the problem is. People are hurting their retirements by making terrible, costly decisions about Social Security. People say, well, I don't think it matters. Yes, it does matter. And I'm going to show you many, many different ways why it matters. Okay? Also, I want you to know that I have a handout, and I'm also offering you a PDF analysis, a report. You're going to email me, and if you have questions or if you would like the report that would basically tell you the top 5 different ways you could do Social Security, that is complimentary. Professional evaluation, if you'd like to have this, if you'd like to discuss this, there's a small charge for that. But the complimentary analysis is yours for really figuring out what's the best way to do this. There are some things to know about Social Security. You have not a lot, but you have different options in how you can claim this. These decisions, if you're 65, there's a possibility. I know some of you may say, no, I'm not going to live that long, but there's a possibility that you could be looking at the next 30 years. That choice of what you do now could impact both spouses. And the system is not bankrupt. I'm going to talk to you about that. It is also not a Ponzi scheme. And the benefits likely help a family member that you are aware of. Your friends also are not experts on this. So if you want to know, also, another thing, little disclosure, I'm a financial advisor. These are my opinions, but because I've been teaching this class for a long time, I do have opinions about what I see and what I've seen with clients. You're going to want to know the following. Is it going to be there for me? How much can I expect to receive? When should I apply? That's the big question. How can I maximize my benefits? And will Social Security be enough to live on in retirement? Yeah. So it's something that really your parents probably never asked how it was possible to maximize benefits. There's absolutely nothing wrong with using the Social Security rules to your advantage. So today we're going to talk about ways you can maximize your Social Security benefits simply by knowing the rules, right? And making smart decisions. That's why I'm doing this. I want you to make smart decisions. And finally, you're wondering if Social Security is going to be enough to live on in retirement. You probably already know the answer to that. Social Security represents about 40% of the average retiree's total income. But by coordinating Social Security with the rest of your retirement income plan, you can pursue a comfortable, worry-free retirement. Okay? That's what I think you would probably agree with me that you want to know. So most people tend to minimize the value of Social Security. If they believe that they're likely to get something back from the system at all, they think it will be a minimal payment and not enough to really count on. But Social Security is more valuable than many people realize. So there are many different ways that we're going to look at this today. And so if you worry, well, if it is going to be there for you, this has led to a lot of misunderstanding and irrational fears about the solvency of the Social Security system. So let's look at what the Social Security trustees say. Every year they publish a comprehensive report showing the long-range outlook for Social Security. So it was designed as a pay-as-you-go system. And payroll taxes from current workers goes through a trust fund and goes out to pay for current retirees. So right now that trust fund holds about 2.7 trillion, which is invested in special issue treasury securities. And as baby boomers start retiring, those trust fund assets will gradually be drawn down. So over the next 75 years, they're basically saying that there's enough assets to pay 100% of promised benefits until 2034. At that point, if nothing is done, and that's the operative word, if nothing is done to reform the system, then income will be sufficient to cover only 81% of promised benefits. So what would it take to really restore solvency? There's a couple of things. I have taught this for years. Maximum earnings subject to Social Security tax is at $176,100. I think they need to dramatically increase that so that more people continue paying into Social Security for a longer time, or just eliminate it together. I also think, and I've said this for years as well, I think that it's possible that the normal retirement age could rise from 67 to 70. It's also possible that they might lower benefits for future retirees. That is possible. Or they might do something with the formula and reduce the cost of living adjustments on that. So those are all things that could happen. But really the bottom line for you, if you're 65 to 70 right now, your benefits are not likely to be affected by Social Security reform. However, our kids, I've got kids in their 40s. I'm telling them, you need to, yes, Social Security will be there, but you need to have your own retirement savings as well. So what is a better way to think about Social Security, really? What do you think? It is inflation protected income. You paid the premium in every paycheck, so it'd be smart about how and when to collect, right? Okay, that's insight number one. So if your monthly income is $2,000 today and you live 20 or 30 more years, you look at this is significant. $583, almost $1 million in benefits. That's a big deal. I want you to really think about that. So How and when you take it is important. And because it offers an annual inflation adjustment, a benefit in 10 years that was $2,000 now could go to $2,438, but in 30 years, it would be $3,600 from $2,000. So that's assuming a 2% annual cost of living increase. I always say, especially for the higher earning wage earner, delay taking your Social Security, because if you die before your spouse, you want her to have the maximum benefit that she can have. And you want that larger, you want the cost of living to be calculated on a larger amount. Okay. So how much can you expect to receive? Your benefit depends on how much you earned over your working career. Like for me, my first husband was in the military. We were overseas in Germany with the U.S. Air Force in the 1980s. If I look at my history, there was a whole bunch of years where I was having babies and we were overseas and I wasn't earning a wage. But if you've been consistently working, you're going to have a fairly decent benefit. And the age at which you apply for benefits is important to really realize. So I'm not going to go into the math, but Social Security benefits are calculated or tallied up and indexed for inflation, and the highest 35 years of earnings are averaged, okay? And then there's something called Ben points, and that benefit is increased each year by the cost of living increases, okay? So I'm not going to spend too much time on this formula, but I'm just telling you there is a formula about how this is calculated. So the longer you put into the system and the longer you wait, you're going to benefit. And there's a break-even point. Like if you started at 62, not only are you going to get penalized and have a much lower benefit, but you're going to see that like usually between 78 to 82, if you would have waited, you're going to be receiving much more in those later years. So you may say, well, that's good to know, but why shouldn't I just claim at 62? I can't make that much difference, right? Well, your monthly benefit, here's number 2 insight. Your monthly benefit will be reduced if you claim early. That's just period, end of story. It may also be reduced for taxes and Medicare premiums, right? And benefits could be withheld if you're working. I'll tell you several times. Don't work and take Social Security at the same time. Don't do it. So when should I apply for benefits? Number 1 would always be wait to do benefits until your full retirement age. Your health status has something to do with it. Your life expectancy, your need for income, whether or not you plan to work, and survivor needs. Those are all huge factors. And yes, I've had people say, you can't tell me when I'm going to die. No, I can't. I get that. But if you have a reasonable idea of what your health status is, if you have a reasonable idea of what your family history is for life expectancy, think about it. If you're still working, don't touch this. Wait until you're done. Wait until 70 to start taking it. Will Social Security be enough to live on in retirement? Probably not. Maybe, like I said, maybe 40%, right? So here's what that FRA, if you've seen that term, it means full retirement age. Most of you listening to this are probably 1960 and later. Your full retirement age is probably age 67. And so if you apply for early benefits, it can be reduced, right? If your full retirement age is 67 and you apply at 62, it's going to be reduced 30%. And that's permanent. You're never going to make it up. And so let me show you what that means. If you apply after full retirement age, you get something called delayed credits. So it's 8% a year. And so if you look at the last column, It could be an extra 24%, 8% a year times 3 years. So you're going to have an extra 24% in your monthly benefit if you wait until age 70. Plus, you're going to have a higher cost of living increase, right? Because you're dealing with a higher number. So make sure that you go out to your socialsecurity.gov. Make sure that you go in and look at your account. If you do email me for the complimentary analysis, I'm going to need your estimated benefits from your Social Security account. Okay. So here's another reason why. Bigger checks now mean bigger checks later. So if you started benefits with the COLA, so like if you started at age 67 and it was $3,300 a month now, at age 7 and you wait until 7, that's like another $1,000. So bigger checks are going to come because of having a little bit of patience in starting. And I know I'm going fast, but there's a lot of information to cover in a little bit of time. Here's more. If you have a benefit at age 70 and it was $43.59 if you claim at 70, and you do happen to live to 100, that could be $7,800 a month. That's a big deal. Even if you live to be 85, that's $58.66 a month. I mean, what I'm saying is this is not small potatoes. This is a big commitment on the U.S. government's part. So how do you maximize your benefits? You need to get educated. You need to examine your earnings record from you've gone and found your Social Security statement. You're going to go in and you're going to look and you're going to make sure it's accurate. Is there any missing years? Can you improve it by working longer? Apply for Social Security at the optimal time. What are your income needs? What's your life expectancy? What's your spouse's life expectancy, right? Those are all things. Taxation of benefits. Have we heard just a little bit of stuff going on with that just recently? Well, there was a tax bill that passed on July 4th. Let's take an example of it doesn't eliminate taxes on Social Security. It just seems like that. It's a deduction. So the married couple, both age 65, under the $150,000 income limit, they're now going to have a maximum total standard deduction of $46,700. That's for 25, 26, 27, and 28. It's not forever. It's a base standard deduction of $31,500 plus a senior extra deduction of $3,200 plus a new bonus deduction of $6,000 each or $12,000. That's how you get to $46,700. And so it doesn't eliminate taxes on Social Security. It's just a deduction off of your total income that is figured. Okay. Please, please, please keep working. Understand the annual earnings test. If you are working before your full retirement age, $1 out of every 2 that you earn over $23,400 in 2025 is going to be deducted. So wait until the full retirement age or later to apply for benefits. Okay. And just as a reminder, most married filing jointly couples have an income of over $44,000. Most likely 85% of your Social Security benefit is going to be figured for taxation, right? So just realize that it's going to be still factored into how much total income you have. So ways to minimize taxes is reduce other income, anticipate required minimum distributions, possibly convert traditional IRAs to Roths, delay it, reduce the number of years the benefits are subject to tax, reduce your expenses, pay down debt, adopt a simpler lifestyle, and continue to manage. You're going to always be managing taxes through retirement, right? So the other funny thing is that, well, yeah, you did get a 2.5% increase in Social Security this year, but Part B premiums went up 5.9%. So if you're receiving Social Security and are 65 or older and enrolled in Medicare, your Part B premiums are deducted from your check. If you wait to do your Social Security, you're going to be paying your Medicare premium out of your checking account. Okay. When to apply? If you apply early, your benefit starts lower and it stays lower for life. COLAs magnify the impact of early or delayed claiming. The longer you live, the more beneficial it is to delay benefits. And yes, we do not know how long you're going to live, but it's possibly the most loving thing you can do for a spouse if you feel like you might live as long as your spouse. Your benefit may be taxed and reduced to cover your Medicare premiums. Don't let the earnings test discourage you from working. You know, it's just like maybe work a little bit longer. And delaying benefits may give surviving spouses more income. That's a fact. You may say, I'm not going to live long, so why shouldn't I just claim my benefit while I can, right? Well, here's insight number 3. For couples, you should always maximize the higher earnings benefit to protect the surviving spouse. The spousal benefit is basically 50% of the higher earnings benefit. So if if the wife is a lower benefit than half of her spouses, she's going to get what they call a spousal add-on. So the primary worker has to have filed for benefits. The spouse has to be at least 62 for reduced benefit or full retirement age for full benefit. And there's no delayed credits on spousal benefits. So coordinate your spousal benefits. And basically, because of time, I'm just going to tell you that this analysis that I do will show you when it makes sense for a lower earning spouse to start taking or to get a spousal benefit, and how to maximize the lifetime benefits for both of the spouses. So there's actually thousands of ways that this can turn out. And so with the help of the computer, it's fantastic to be able to look at basically, here's the 5 best ways for us to take it. And then you look at what your life is doing, and this is going to generate income for the rest of your life. So you need to pay attention to what is the best thing to do. So make sure that you take advantage of that. Email me to inquire about getting the complimentary PDF. So if you're widowed or divorced, that also can impact your claiming strategies. You may be eligible for survivor benefits. You may not know that. Divorced spouse benefits. There are divorced spouse benefits that can increase your monthly check. I've seen it happen, and it depends on the age at which the deceased spouse originally claimed. And so those are things that the age at which you claim makes a difference on how this happens. I'll just tell you that, I'm quickly going through these survivor benefits, but I just want you to know that if a spouse dies while both are receiving the benefit, the widow or widower will switch to the higher benefit. Each person only receives one benefit. Okay, so just realize that. I've got a client whose husband is going to be passing away probably in the next few days. Her benefit is like $800 a month. His is like $2,000. Her benefit will go away. She will start receiving his $2,000 a month. Okay. The couple must have been married at least 9 months at the date of death. The survivor must be at least 60. The survivor benefit isn't available if they're remarried before age 60. And the divorce spouse survivor benefits are available if the marriage lasted at least 10 years. Okay. So it's the same, basically the same rule for divorced and widow is basically the same source of things. So this really is more complicated than usually people realize. So with that, I want to ask you again, do you want to be early, or would you rather be delayed? Would you rather pay a penalty, or would you rather get a bonus? I think you know my status on this, and I want you to not hurt your retirements by making terrible, costly decisions about Social Security. And here's the 4 things. It offers inflation-protected income. Your monthly benefit will be reduced if you claim early. Maximize the higher earnings benefit for the surviving spouse. And widowed or divorced, you may be eligible for benefits. Okay? So you need to know what is going to be the best thing for you to do. And so I'm here to help you with that. So consider Social Security. You're putting this together with your IRAs. This is something we've done for a gazillion years, so we're very adept at this. And Social Security personnel, all they do is just look you up and say, here's the numbers. They can't help you with projecting future benefits. They can't help you with looking at the whole scenario. So the questions you might have are, when should I apply? What if I want to keep working? What if I've already applied? How much will my benefits be? How can I coordinate spousal benefits? What's the best long-term strategy? What do I do next? Well, that's up to you. But Social Security is too important for guesswork. Let us help you protect your nest egg, maximize your income in retirement. Email me, and we can move forward with giving you some more information about this process. Thank you so much for joining me today for this quick look at what baby boomers need to know for maximizing their income in retirement with Social Security benefits. Thank you so much for joining me on the Ask Good Questions podcast.
Today's episode is over, but we did ask good questions again, didn't we? Don't miss out as we broadcast live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. Join Bonita Bell-Andersen next week for more conversations with experts on finances, retirement, behavioral finance issues, health and wellness, and more. Until then, remember to ask good questions.